Hello everyone, and thank you for joining us today. My name is Eric Jenkins. I'm the account manager for Connecting Up in TechSoup New Zealand. Connecting Up is part of the Info Exchange Group, and Info Exchange is a not-for-profit social enterprise that has delivered technology for social justice for over 25 years. With over 100 staff across Australia and New Zealand, we tackle the biggest social challenges through the smart and creative use of technology. I would love to welcome you to the webinar today, Know Your Numbers, Setting the Break-Even Point in Your Not-for-Profit, which will be presented by Vanessa Bamford from Vision Beyond Business. We'll start with just a little bit of housekeeping here. All the lines are going to be muted, so if you have any technical issues, please just type it into the questions box on your webinar panel, and I'll do my best to help you out with that. If you've got any questions during the session, please just type it in the question box. We'll be pausing for questions throughout the webinar and then again at the end, so Vanessa will be taking breaks for those, which is great. So if you've got questions, don't hesitate, put them in there, we'll get them answered. Please note your questions and comments won't be appearing to the entire group, though they will just appear to me. If you're on a Wi-Fi connection and have multiple programs open, that can sometimes affect the quality of the audio and video of the webinar. So if possible, just close those other applications down. That'll help you have the best experience you can today. Do note this webinar is also being recorded, and a link to the recording and the slides will be sent later this week when that goes up on the website. So keep an eye out, probably around Thursday, Friday, I'd say, is when that one's due to go up. Otherwise, before we'd like to start, I'd also like to remind you that there'll be a short survey at the end of the webinar. We'd appreciate it if you took a few minutes to provide us with some feedback on how it goes. Otherwise, that's it for me for now, so I'll pass it over to Vanessa to get things started.
Thanks, Eric. Hi, everybody. I'm Vanessa Bamford. Thank you so much for coming along to the webinar today. I really hope that everybody can get some value from it. So the webinar today, Know Your Numbers, Finance and Business, the numbers that you need to know. I'm going to just introduce myself and my business. So Vision Beyond Business, I'm the director and founder at Vision Beyond Business. We're located north of Adelaide in South Australia. Our purpose here, we are a purpose-driven accounting practice. We want to help business owners and organisations succeed and ultimately create a positive impact for not just small business owners and organisations, but our team, our community, and ultimately our future generations to come. A little bit about me, not so much a brag rag, but more so so that you know how I can be sitting here today talking to you about numbers. I have a degree, a commerce degree with the University of South Australia. I have a graduate diploma with the Institute of Chartered Accountants, a fellow member of the Tax Institute. I'm also a tax agent. I'm public practice certified, and I've been working as an accountant now for almost 19 years. I am currently the director of Vision Beyond Business, an accounting, bookkeeping and consulting practice. I also am a business coach, mentor and facilitator. And I do really understand business. I grew up in a business for most of my youth, spending about 7 years in a small country town that survived the recession with a small corner deli that really started to thrive and be innovative with the recession and the evolving 24/7 service stations. So just a bit about me and I guess how I can be here today talking to you. So let's talk simple. Numbers don't come easy to everyone. I guess for me, I was lucky. My dad was a maths teacher. Lucky or unlucky, I'm not sure. I had no other choice but to understand numbers. So the last thing that we really want to do in our organisations is to put our heads in the sand because it's too hard. And that's why I'm hoping that today I can really try and make numbers as simple as possible. I am very open to any questions that you have because today is about you and getting value from this session and what you can take from it. Everyone in the organisation in a responsible role should know about the numbers and how they can affect the change in them for long-term success. So let's talk simply about the numbers, and it really is just little steps. I think we have to run budgets in organisations for 12 months and more. Sometimes we do this without really understanding what we're doing and how we can affect the numbers. So today what I'm going to talk about is really simply how we can set those numbers up for future success so that we can gradually start understanding them, and then hopefully as time goes on you can start looking at your budgets and really making a good contribution to setting those up as future goes on. So the statistics. There are 4 primary reasons why not-for-profits find themselves in unsustainable situations. Excessive costs that can't be supported by ongoing revenue, or revenue being income. The deferral of non-urgent expenses, these can lead to higher costs in the future. So putting things off now for maybe the future, so you're not accounting for them now, which can put you in a bit of an issue later on. The failure to budget or plan for major cost increases or one-time off expenses, excuse the spelling error, I'm good at numbers, not so much my spelling. And number 4 is an unpredictable change in revenue. So for example, I have seen when organisations have lost grant funding or a major donor has either passed away, moved away, or just decided to no longer provide funding for that organisation. So you can see how planning and understanding not just the current numbers but the future numbers are so important to your organisation. Some things to look out for within your own organisation around these risks. Having a lack of diversification in revenue streams, and what that means, if we are as I said before, we're over-reliant on government grants, or we have an over-reliance on a major donor. Other things that we might want to look out for is, if the organisation has a lack of long-term planning. For example, like I said before, overspending before sustainable revenue streams are developed. So you might go, we've just won this major grant, or we've come into this major donor. That's fantastic, and we start spending before we've actually really continued to see that long-term income over time. And the other thing that I see quite commonly is that, unfortunately, organisations can be really slow to respond to market changes. So, I mean, I think it's not just a not-for-profit challenge. I think it happens in all businesses and organisations that it is challenging to make changes in service offerings when we've always seen things done a certain way. So these are just some of the things I would say in your organisation to just look out for and be aware of as the beginning of maybe some steps you can take to make slow and small changes in your organisation over time. The things you can do while we're here today is understand your numbers and what they mean. Identify the break-even point, which we'll do today, and look at your costs and how they contribute to the organisation. Be open to change and innovation. Avoid that old saying of we do it this way because it's always been done that way. Okay, find a better way and always evaluate it. And look at your numbers regularly. Make sure everyone involved understands the importance of them. So why know your numbers? You can't steer a boat if you don't have an oar. So how can you run your organisation without actual information that you need to get you there? This is one that I have often referred to as that boat that sits in the middle of the lake and just goes nowhere, spinning around and around. It is really important that you have clear direction in your organisation, and I suppose one of the best ways you can have clear direction is by really understanding the numbers and where they can take you. So we're going to talk about the break-even now. The break-even point is the minimum that the organisation needs to generate or make to survive at the current levels it currently is. So when we go through the workbook in a minute, it's really important for you to think about the business where it is right now. So rather than thinking about where you want it to be, I want to know when you're working through it, where your business is currently. So we're talking about costs and that kind of thing. That's how we're going to calculate your current break-even, all right? Ideally, you want the organisation to thrive, not just survive. But like I said before, we're going to just take baby steps first. A break-even makes you dig down into organisation costs and the process of understanding your spending. So today, I'm hoping that everybody has got some numbers there that they can start to work through and understand how this process works. The other side of that, though, is you may have a few, I don't know, aha or oh my God moments of are we really spending that, or what are we spending that for? And I really hope that as part of this break-even process, you can really start to dig down into those organisation costs and really understand what you're spending on and where it's going. So before we get into the steps from your worksheet, is there any questions so far? I know I've been quite general in some of the information, but is there any questions at all? I'll just leave it
at the moment. It looks like, Vanessa, no.
Not so far? Okay. So is there anybody that, if anyone hasn't received their their workbook, please just let Eric know. He might be able to flick that across to you as we get started. So there are 5 main steps in the break-even point calculation. The first step is identifying a gross margin, and this is mainly required if you're selling goods. We're actually going to skip this step for this session and assume that a gross margin is 100%. So if, for example, you are selling products or services within your organisation, then we would need to consider what the costs involved are in making that sale. As I said, we're just going to skip that one. That's actually quite an in-depth gross margin calculation. I'm more than happy to correspond with anyone that might have that particular circumstance after the session, if you like. Step 2 is we're going to add up your overheads. So I'm going to pull across to my screen the break-even worksheet that you would have received. And we're going to have a look now at the break-even step 2 costs. All right. Now, common questions I get asked about this is, you know, what about GST? So one of the things I need you to be aware of when you're calculating your break-even cost is that none of these figures include GST. All right. So when you're considering those costs, if, for example, you only know the GST included cost, then just make sure that you divide it by 1.1 to get back to the what we call the net amount. All right. So I've just plugged in a few figures here. Obviously they're fictitious, but in the hope that I can, I guess, guide you through and work through it with you. I have only done this in front of a group of people, so any feedback or any questions you've got along the way, I'd really like you to try and work through this. And I'm more than happy to answer any questions you might have as we go. So obviously, this is not an exhaustive list in step 2. I haven't thought about every single cost that your organisation might have. But definitely you're going to have accounting and audit fees, all right? And again, these are annually, all right? We're looking at these costs annually. So we want to include all of the costs of the organisation from an annual perspective based on where your business or your organisation sits right now. So, for example, my organisation, my ABC not-for-profit, has accounting and audit fees of $10,000 per year, all right? So I'm allowing for that, like I said before, net of GST. We also use a product called Xero accounting software, one of the best products, but that's just my biased opinion. Accounting software fees, I know, for example, I've got a little formula up here, so you can put formulas in. And I know that we pay $80 per month, and I should have done that exclusive of GST. $80 per month and times by 12. So I've allowed $960 for accounting software. We have the bank fees of $10 per month. So I've allowed for $120 in bank fees. Business insurance, computer support and IT costs, council rates, electricity, you know, all of the costs that the business, the organisation has. If I scroll down a little bit, the wages and superannuation costs. A lot of organisations have, I guess, these can be broken down more into programs or departments as well. So you might have some staff that work in admin, some staff that work, you know, on a particular program or a particular area of the organisation. In this section here, I want you to put all staff. We want all staff costs in there. Right, and then superannuation, if you're in Australia, at 9.5%. I've just done a formula based on the wages there. Give me 1 second. Sorry, I'm just going to pause for 1 second. Just had a question. Sorry, everybody. Give me 1 second. I'm just going to flick this across. Okay, let's go back. Okay, sorry, let's go back. So back to the worksheet. So in regards to your wages, you're making sure that you're allowing for superannuation, water rates, website hosting and updating, and program costs. So remembering in here that we're allowing for our current costs. I know I've said it before, but I'm going to say it again. All of the current costs where the business, where the organisation is at right now. Then step 2, it'll automatically come up with a total for you. Then we get to step 3. Now I'm just going to go through the slide quickly. So overhead costs. Now we're going to have a look at the break-even calculation for balance sheet payments. It's really important. There is a major difference between surplus or deficit and cash flow. So one of the things that a lot of organisations have a look at the end of a month or a quarter is they'll pull a profit and loss and they'll go, okay, this is the net surplus or this is the deficit, which I hope doesn't happen too often. And I think one of the things that we forget to consider as well are the balance sheet payments. So for example, if you've got any ATO debt, so if you're owing for any outstanding maybe superannuation contributions or any BAS payments, maybe you're on a payment plan, it's really important that in this next step that you consider where that's at right now. Any other loan repayments that you might have, for example, you might have vehicles that you're paying lease repayments on. We need to consider that in this section. And the other things that are really important, and this I guess is those future costs to consider, is are there any capital items that you need to allow for? So are there any huge purchases or costs that are going to come up within the next 12 months that you really need to consider? And any excess surplus or savings that you need to make sure you're putting aside. So all of those things need to be considered in our workbook on the spreadsheet. Excuse me, sorry. At step 3. So you can see here, I've assumed that my ABC organisation has actually got, unfortunately, some debt repayments that we need to make to the tax office for current BAS bills and superannuation that we've gotten a bit behind on. Capital items that we've allowed for here is 10,000. We've got some major IT upgrades that we need to consider, so we've put that in here. And excess surplus funds or savings per year. So we want to make sure that we've got a bit more of a buffer than we currently do. So we want to start making sure we've got some extra savings there. Now, that's not always necessary. I mean, if the business currently has a buffer, then obviously you can just remove that if there's no capital items. But do consider if there are additional, what we call balance sheet items, or outside cash flow items of the profit and loss that need to be considered. Then at 3A, it'll tally up for you, all right? And at step 4, you've got the total cost to cover. So basically, this spreadsheet is now telling me that my organisation needs to make $392,630 per year just to break even, just to cover current costs, all right? So that's us setting up that real, really simple and straightforward current break-even point. So how much do we need to make to cover our current costs where we are? I've been through this with quite a few people, and some people go, oh, yep, that's where I thought we were. Some people say, oh my God, my business is going to shut down. And I think whichever way you're looking at it, if you're one of the organisations that's sitting there going, yep, no, we're fine, that's great. However, there's still opportunity for us to look at how we can improve the current performance. If you're an organisation that's sitting there and maybe crying or having a few tears over what you've just put through, I think one of the main things to consider as well is that you can affect change by understanding this now. So I guess the picture that I had up before on one of the slides, where your head's no longer in the sand. You have, clear understanding of what the organisation needs to achieve. And so when you have a clearer target, it's much easier to achieve that. So I'm going to move on. Is there any questions? I'm just going to pause for a minute because sometimes I forget that that's a lot of new information for some people.
The main questions we've got at the moment is around the workbook, so I will be sending that through in an email in just a minute or so. I'm just getting the last couple of email addresses to do that now. So if anyone else hasn't got it, please send me a note in the chat box. I'm about to send an email out to everyone that hasn't got it so far. So I'll send that through in a minute or so. So please send that through, guys. I'll get that done. Otherwise, we've got another question. There should be a copy of the slides that we'll be sharing with the recording later this week. Otherwise, we haven't got any other questions at the moment. But again, if you guys have them, please send them through.
Yep, and what I'll do is, I realise that some of you don't have the workbook. What I might do is I might just keep going, and then I think we'll probably have a bit of time. I've left a bit of time at the end for questions, and we can go back over that break-even worksheet as well, just so that no one's missing out. It's really important for me that everybody can work through that and ask questions, so I'm more than happy to go back to that and allow time for that as well. So once we've worked out the break-even point of the organisation, and again, like I said right at the beginning, I try and make things as simple as possible. I think we can get caught up with, tens of hundreds of pages of information that, in this day and age, we don't always have a lot of time to go through it in minute detail. And so one of the things that I think is really important is having what we call a business dashboard. All right, so within the worksheet, the workbook, you'll receive sheet 2, which is this business dashboard. So you'll see on the right hand side these numbers here. All right, and they're actually filtered across from my break-even worksheet here, and they've gone into just a simple monthly calculation. The annual amount divided by 12. It's not highly sophisticated. Obviously, I did mention when I was providing information, this is not a budget. This is merely a month-by-month idea of where your break-even point is. So from the break-even calc worksheet in the business dashboard, I now have what my monthly break-even looks like. Now, this business dashboard is a very simple tool that I hope that you can use in your organisation to establish where the business is at on a monthly basis. Now, I'm going to go over to my slides for a second. The reason that we created the dashboard for organisations, and we do have software that we actually use to provide this for our clients, is your dashboard is no different to the dashboard you have in your car. I like my little analogies here, but you know what speed you're going when you're driving a car because you can look at your dashboard and it'll tell you what's going on. It will light up when the engine's failing or you need petrol, for example. In the same way that your car needs a dashboard to tell you just the main things that are going on, all it does is it flags to you that there might be an issue. The same way that this dashboard can help you to understand or flag if there is an issue as well, so that you're not looking at tens of hundreds of pages of information each month or quarter. The purpose of this dashboard is actually so that you can have what we call a flash look at what's going on in the organisation on a monthly basis. All right, so numbers tell a story. I guess they tell a story to me fairly well, and I'd hope that over time, over simple and effective reporting through this dashboard, that the numbers can actually tell you a story too over time. One of the things I find is that organisations will look at a report at the end of every month, end of a quarter, or even end of a year, and they can look at it and it's a whole bunch of numbers on a page, but how do you know what they mean if you don't know how to affect the change in them? For example, I can run a profit and loss, but unless I know maybe what the business looked like last month or what the break-even point is or where the business was at last year, I've really got no point of reference, no way of I guess, reviewing where the organisation is at. So setting a break-even point for the organisation and reviewing performance against something like and reviewing the performance against something that you can measure means you can track towards success quicker, and you can also become more proactive versus reactive within your organisation. Looking at the numbers regularly and simply like this means that you will learn trends, you'll start to become familiar with common issues or opportunities, and you'll slowly be removing your head from the sand. So as I showed you before within the workbook, this is your organisation dashboard that I really hope that you'll be able to use. Sales or revenue or grants, just everything kind of gets piled in together. Your overhead costs, which we work through on the break-even calc worksheet, and we'll have a look at that again in a minute. And then if I bring this across over here. So let's just say, for example, you've finished the month of August and you've received 40,000 in revenue. All right, you've paid 35,000 in overhead costs. All right, so your net profit for the month is 5,000. So as long as you've got 5,000 or 4,166, 67 or more, then your cash flow, so based off my worksheet, it also means all my cash flow items are covered as well, all right, all those balance sheet items, the debts. One of the things that we need to do with this at the end of the month, and I would highly recommend that this is done every month on completion of the end of month process. So once all the accounts department's finished and everything's in there and the bank's reconciled for the month, is that we run this. So we've got our monthly break even here, and then we're putting in our actual results for the month. You have the spreadsheet, or when you have the spreadsheet, you can put those figures in, and you now have a comparison, a very simple flash comparison, all right? So straight away I can go, right, that's fantastic. Our revenue has improved this month to what our break even is. That's, you know, like, that's brilliant. Our overhead costs have blown out of what our monthly average is. So I would probably go back and have a look. What's blown out? Is that understandable? Was that something out of the ordinary that we hadn't allowed for? And the net profit. So net profit or surplus, as you want to call it. Again, we're comparing to something. Rather than just seeing these numbers stand alone, we're looking at them and we're comparing them to something that can actually add more value, because we can measure it and we can now manage it as well. So what I have put down the bottom here is how to compare the actual results to your break-even, your monthly amount. And it's really important to ask these three questions, all right? Why did that happen? For example, why are my monthly actual sales results higher? Did we do something better? Did I not allow for something that maybe is going to come up next month instead of this month? Why did it happen is really important. This is about learning those little steps of learning about the numbers really simply. Why did it happen? The next question is, how did it happen? For example, sales went up or revenue went up because, you know, we had a new donor donation come through. Okay, that's great. So that's why it happened. How did it happen? How did they find us? How did they decide to contribute to us? And the next question is, so what can I do to change the results for next month? And this is a question that you need to look at regardless of if the results are good or bad, because if you have good results, you want to replicate those results. If you have bad results, obviously you don't want to replicate those. So it's really important to say, for example, with the revenue example, what can I do to change the results for next month? Well, if I've found out how that happens, so that we've increased our revenue, we've got a new donor, okay, well, what can I do to make sure that that happens again? Or you know, can I contact that person? And is there an impact you can make based off of those results for the month? And looking at them isolated, so I've talked about the revenue, overhead costs, for example, I'd be saying, hey, why did that happen? Why were the overhead costs more? Did I not factor something in? Was it just the ebbs and flows of the month? Or was there a cost in there that I really don't understand how that could have even happened? Did I not allow for something? So understanding why did it happen, how did it happen, and what are you going to do to change it so it doesn't happen again? and then reviewing your net profit. So for example, let's just say this month's actual results were a little bit different. Let's say that my overhead costs, so my sales, I'm going to say, were 35,000 and my overhead costs were 30,000, all right? So you can see from, that's still not what I wanted 32. Oh, 320, let's hope not. 35,000, we would look at sales and go, okay, that's fantastic, you know, our revenue's gone up, all right, but we don't want to look at sales as an isolated number, because revenue on its own is not a good measure. The other question I'd have over this is the overhead costs have blown out. So because of that, even though our revenue's gone up, because our overhead costs have gone up, our net profit's gone down, which means we actually haven't been able to fund all of those debts for the month, because the net profit, if the net profit is lower than this cash flow figure here, we're going to have an issue in paying our debts, all right? So it's really important for us to identify, for example, on this area, okay, this went up, sales went up, that's great. How did that happen? Why did it happen? And what can we do to change it, or, you know, make it happen again? But the overhead costs have blown out. Now, was that because, for example, why did it happen? It might have happened because we had an event here, but we overspent here. So that's really important we understand the why, the how, and the what we can do to change it for next month. I'm going to pause again for a minute. Has everybody received their copies of the workbooks?
If you haven't, again, just let me know in chat. I did send that out several minutes ago now, so I don't think we've had anyone that has said they haven't, but if you haven't, let me know. I'll grab your email and we'll do it. We actually have got a question as well for you, Vanessa.
Yes.
So I've got someone that's asking, if you have a large lump sum payment on both the revenue as well as the expense side, would you consider averaging those out to monthly to get a clear picture of your overall performance, rather than looking at 1 month where you received an annual grant payment and then no income for the following months?
Absolutely. Yep. Wonderful question. Absolutely. Hopefully that answers your question. But like I said, this is merely a simple way of tracking, I guess, the numbers in the business organisation. Sorry. And so I would definitely take that approach. If you're getting a lump sum, by expanding it, you know that that amount is for the whole year. Expanding that out, like you said, or apportioning that out over every single month would be a really, really good way of approaching it. You can look at, for example, bringing it in through like a monthly journal. So putting that grant or that donation and those costs into, say, a balance sheet item and bringing them in monthly, just so that from a reporting perspective you can see them throughout the whole year rather than just seeing them in the 1 month. Or if you're going to run this this dashboard report, just bringing that in every month, I guess taking it out of that particular month and then bringing back in that monthly figure. Thank you for that question. Is there any others at all?
Sorry, just unmuting myself. I don't believe we do. We've got a couple of people that I think haven't received the workbook, so I'll flick it through your way. Otherwise, feel free to keep going.
Awesome, no problem. I'm almost towards the end, so it'll actually be good if I give a few more minutes in the hope that everyone's got the worksheet, and we can go back to that as well, all right? Sorry. The next section within the worksheet is sheet 3, which is a SMART goal worksheet. So the dashboard, as I've said, I think this is something that you should be using monthly at the end of every month, and very religiously. It is a really quick, as you can see, it's really quick report. It's not onerous, and I do think that this is something that should be used not just by the finance department, but by the CEO, and even the board should be looking at this and getting an understanding of the numbers in a simple way. It's far less overwhelming. And particularly if you've got people within your organisation that may be overwhelmed or possibly ignoring the numbers at the moment. This is a very quick flash report that you can bring to their attention that I would say to you, they will start asking questions and they'll start taking an interest because it is so much more simple. It obviously doesn't replace a budget or a forecast by any means, but it is a way for the organisation to start tracking and watching numbers more simply. The last worksheet that I've got in there is called the SMART Goal Worksheet. All right, and it's really just about revisiting the purpose, vision and values of the organisation and setting your 12-month goals. Now, I would hope you've already done this and probably part of your planning and your budgeting, you probably have, but I'd like to assume that maybe some organisations haven't. And so, oops, wrong one, bringing this one across. So, worksheet 3. When the organisation, and you might be in a situation where the organisation is already has already surpassed the break-even point, and that's fantastic. So when we've got the organisation to get past survival, we want to go into thrive mode, because survival is stressful and it's financially stressful for the management team, the board, and the finance department generally as well, and it has a flow-on effect throughout the whole organisation. So obviously in your organisations, I imagine you're very purpose-driven in why you exist, what the purpose of the organisation is. So the 3 pillars of business I've put in here, because business and organisations are really no different, except for obviously organisations generally are more purpose-driven. Why does your business exist? I think it's really important to revisit it often, because it is that, I guess, that carrot that dangles in front of you when things get difficult. So why does your business exist is really important to remember that, because when it comes to making decisions in the organisation, it's really important to remember why the organisation exists and whether or not those decisions are in line with the purpose of the organisation. The vision, what do you want to achieve in the long term? I think making sure that you've got this spelt out, that everybody understands what you want to achieve and why the business is there, are, 2 very important things that everyone should be across, not just finance and senior management and board. I think everybody in the organisation needs to be involved in understanding why the organisation exists for a long-term perspective. And the values are, obviously pinpoint culture and how you're going to do what you do and how you're going to do it, and who you're going to do it with. Even though it seems very simple, and probably for some people they wonder why they might be revisiting what they've already done before, I think this is the core of decision making. If you understand why the organisation exists, what you want to achieve and who you're going to do it with, then decision making doesn't become so overwhelming and challenging as time goes on. Then in the next section here, I've got, think about what you'd like the organisation to achieve in the next 12 months. Excuse the word business in there. It's it used a lot for small businesses, this workbook as well. Be specific, obviously clearly define and explain the 12 months goals, and make sure that we can measure those goals. So put a number on it. For example, if you want to have, I've got in the number of customers, but you might want to have a number of donations. And this can come back to the break even. Once you understand your numbers, you can use those numbers and go, okay, well, if we get, if we get 500 donations per year, what value do those donations need to be per donor? And make it measurable. So for example, if it's 500 a year, then on average we want to have, say, 50 donors per month. And so really measuring the specific goals that you want to achieve. So those goals need to be financial as well as strategic and impact, obviously. Make sure they're attainable. So don't set something so big and so unrealistically optimistic that you can't achieve it, because it's very easy to stop yourself in your tracks quite quickly when you're not achieving those things. So make sure it's attainable, make sure it's realistic so that you can attain it within that 12 months make sure it's not too easy, but make sure the goals are a little bit of a stretch, and make sure it's timely. So for example, we're talking about 12 months, we make sure that it's a 12-month goal. And I've got in here that making sure that you detail those goals down the bottom. Now the reason that I've put this in here is because this is when the business has hit that, when the organisation has hit that point of survival, we then want to go back and we want to revisit the break-even worksheet for thriving. So we want to go, okay, we want this organisation to thrive now. So, you know, one of the things in here is, you know, we want to donate or distribute, for example, an extra 100,000 per year. All right. So this is our thriving point. This is our surviving point. There are two different. And so that's why I've brought in that SMART goal worksheet, is so that we're really considering where are we now with survival and where do we want to be with thriving. So can I confirm everyone has that worksheet now? And I'll go back to this section, and any questions might be really helpful as well, so that I can go back over if anyone's stuck on anything in that particular section.
I've got a question in at the moment while we wait for anyone to check in on the worksheet. So I've got a question asking, can you please clarify how cash flow inputs are derived?
Cash flow inputs are derived, so where these figures come from?
Yep.
Yeah, so from the break-even calculation worksheet in section 3, so you're probably familiar with cash flow being, you know, the cash in and out of the business. Probably the wording might be confusing some. These are the items that make up your balance sheet that are outside of the profit and loss. So things like debt repayments, capital items to allow for, and any excess, surplus or savings per year. So this is on top of everything else that's going through the organisation. So for example, a normal break-even point, if you have no debt and you're not allowing for any additional surplus in savings or capital items, which are all balance sheet items. So for example, savings in the bank obviously is a balance sheet item, saving for capital items is a balance sheet item, and debt is a balance sheet item. We want to make sure that the net profit or the surplus of the organisation is a minimum of the cash flow figure, because that covers all of those balance sheet items. So maybe it's better off referred to as maybe balance sheet items rather than cash flow. Sorry for any confusion there. I guess it's excess cash flow that I'm referring to there. Does that clear that question, or please let me know if it doesn't.
Will do. All right, in the meantime, I don't think we've had anyone, oh, yep, that has clarified the question. Thank you very much, Vanessa. Now, no one else has spoken up. It looks like, I think it's safe to assume that everyone's got the workbook at this stage.
Yes. Okay, no problem. So I'll just go back to the break-even calculation worksheet, and please do ask any questions as we go. So as I mentioned earlier, step 1, I'm assuming 100%. So we need to have a percentage in there. If you're, as I mentioned earlier, if you're selling services or products, please, by all means, if you want to email me, it's on the workbook, just on the front page there, vanessa@bbbusiness.com.au, and I'll send you through the workings for a gross margin calc. It is far more in depth and takes a lot longer, but I have assumed for this webinar that we've got no sales of products or services as such. And then going through your profit and loss items and putting your annual costs, and remembering it doesn't include GST, all right? So if you have a GST amount, for example, GST inclusive amount, for example, so let's say your accounting fees is 11,000, including GST, just divide that figure by 1.1, and that'll give you what we call a net amount, all right? Putting the net amounts in here, so for example, I've done that one wrong, so I would have 80, because I pay $80 a month for Xero software by 12 months, and I'm going to divide that by 1.1. All right. And then working through all of the costs in the organisation. So, you know, some of you may have a far longer list than this. It is just an example, but putting everything in there from your profit and loss, remembering profit and loss items only. So forgetting any income, any revenue or grant income, all of your costs need to go in here. All right, so marketing costs, and remembering as well, this is where the organisation is currently. All right, so not where we're thinking it's going to be, but where it currently is. So for example, let's say you've only been in your organisation for a few months and it hasn't actually been going for that long, then establish this break-even point on where it is now. I often will speak to people about trying to run this break-even point very regularly, especially if you're in startup phase. It's super important to make sure that you're running this regularly because there's so many changes going on. And the other thing is, if you're in quite a stable organisation that's been running for some time, running this at least once a year is like the minimum. You know, when you're doing your budgeting, running this as well, because then it can really show up some red flags if when you're doing your budgeting or future forecasting, it'll let you know if there's anything in there that you maybe need to be aware of or you haven't allowed for moving forward. So working through step 2 is purely profit and loss. Remembering, even though I've got here wages for admin staff, super for admin staff, that's all staff within your organisation. If you do have products and services up here, we can, like I said, I can give you that worksheet for afterwards so that you can work through that separately. And once you've worked through and put in all of your essential current costs, all right, I'm just going to remove that distribution section for a minute. If you've got a minimum distribution, obviously put it in. And the formula at step 2 will total that up. All right, so I can see $362,543 is my total costs. Then at step 3 is where you add up your balance sheet payments. So this is your debt repayments. You know, if you have an ATO debt that you're currently paying down, put the total in there. If you've got payments for, say, vehicles that you're paying like a lease on, or you've got, say, lease of a printer or a other capital item, put all of those in there. These are the things that sit outside of the profit and loss. They're called the balance sheet payments or the cash flow that we were referring to before in the question I had before. And if you're allowing for any future capital items, making sure that you're putting that amount in here. And if you've got any excess or surplus funds that you need to save for, let's just say at the moment you're running the organisation very thin and there's not a lot of money, and you'd really like to have some excess surplus, you know, in the bank just as a buffer, and that might be a high priority for you, then start allowing for that here as well. At step 3 here, we've got a total, so that's totaling up all of these balance sheet payments. And then you'll see now at step 4, the total cost to cover, which is ultimately the break-even point for the organisation, is $412,000. Is there any questions in there at all?
Not at the moment.
Okay. From the worksheet, this will automatically filter through to your business dashboard, the point 2. And this is where, so these ones here is what I've written in. These ones here have come, as you can see, straight from this worksheet here. It does just simply break it down into 12 months. I know that organisations aren't a straight line and they go up and down, but this is your minimums. These are the minimums that the organisation needs to see monthly, and it is just a guide so that you can get started at looking at the numbers. So, for example, the month of August, we're going to put in what our results were. So from the profit and loss, I can see the total revenue received, 40,000. Total overhead costs to the organisation on the profit and loss, and then ultimately the net profit or surplus is the difference between the two. So then our cash flow / balance sheet items, which I can't write over, is $8,000, the same as net profit. And then when comparing, so now it's really important to compare the results. As I said earlier, there's no point looking at numbers on a page if you've got nothing to compare them to. So comparing to your monthly break-even results here and having a look and going, okay, well, why did that happen? Why are my sales up by 40,000? How did that happen, and what can I do to change the results for next month? So I'm going to go over to here. That's pretty much it. That's everything I had today. I'm very open to any questions whatsoever. Today's session is about you and adding value to you and your organisation. So if you have any questions, please do ask. We still have a little bit of time if you'd like to ask anything at all. Please don't be shy. I've been asked a bunch of different questions over time. Common question that I've been asked, I think I mentioned it earlier, was do the figures include GST? So making sure that's not in there. I think some people in the past have asked me, but how does it work? We're seasonal, we're busier at this time of year, we're busier at, we're quieter at this time of the year. Just remember that you can have a look at your break-even point from an annual, a monthly, or a quarterly perspective. So if you want any help changing any of the formulas to better suit or accommodate you, let me know. I'm more than happy to help you with that. But it's just a guide. I think the main point of today is that it really is a guide to help the main responsible people in your organisation to really start looking at how they can affect change in the numbers in the organisation. It is simple. It's not a budget. It's not a forecast. It's just very simply understanding the numbers and having that, that quick flash report, as I said, the quick flash report here, so that you can see what's going on and how you can change those figures for the future. A lot of organisations and businesses don't look at things for 12 months until, say, the accountant or the auditors come along and given them the annual report. So you can affect change quicker, you can pivot and achieve more by looking at those figures monthly, but also understanding how you can make change to those figures on a regular basis. I do have a passion for helping purpose-driven organisations and businesses to succeed, and it is really only possible with feedback from you that will help me to improve my impact as well. I do hope that I've added some value to you and your organisation today. If you do have any feedback, I am very open to good, bad and ugly. If it was terrible, if you hated it, please let me know. If there's anything that I could have done better, because I would like to make sure that if I'm taking an hour of your time, that I'm making that as valuable as possible. So I'll pass over to Eric if there's any more questions at all. Otherwise, thank you very much for attending, and like I said, if you've got any questions or any feedback, I would love to hear from you. Thank you.
Thank you, Vanessa. Now, we haven't got any questions in the moment, but I'll give people a minute or so to send that in while I do a bit of an outro here. So thank you very much, Vanessa, for presenting today, and thank you everyone for joining us. I hope you did learn a lot from the presentation and that we did manage to get through the questions so far. Thanks for bearing with us with the workbook as well. If you have any questions that come to mind later, obviously you've got Vanessa's details there. If not, feel free to send that through to events@connectingup.org and we'll see if we can pass that on. Likewise, if you've got any feedback, again, Vanessa has shared her contact information. It is in that workbook, so please do have a look. Don't forget the recording will be available on the website. Now, that is probably likely to be later this week at this stage. I'm estimating Thursday or Friday. When our events coordinator is back from leave, she should be able to put that up on the site along with the slides as well. So don't fuss about that. Thanks for being with us. Otherwise, enjoy the rest of your day. We look forward to seeing you next time. I haven't got any other questions here, so have an early minute, guys. Have a great afternoon. Love seeing you next time. Thank you again, Vanessa. Have a good one, everyone.
Thanks, everyone. Bye.